What if I told you that the financial advice you learned was missing something? Not that it's all wrong, but just missing something. What if I told you that over 66% of people believe they'll run out of money in retirement? And what if I told you that 40% of people actually do? Well, today, I want to show you the retirement savings tip that's been hidden in plain sight. And I'd encourage you to consider it because it might just be the piece you needed, especially if you feel like there has to be something more. And if you stick around to the end, I'll be sure to tell you why it isn't widely known or widely used. So whether you're a young professional looking to be prudent and responsible for the future, or you're 50 years old looking to change the trajectory of the rest of your life, what I'll share in this video can work for you. So let's back up and imagine with me for a second that you're a novice mountain climber and you have every aspiration to be an expert, the best of the best at mountain climbing and climb the largest mountains in the world. Would it be possible to climb every mountain you've ever dreamed of if you only learn how to get to the top? No. Wouldn't it make sense that there might require a different skill set to get down the mountain safely? In other words, there's two sides to every coin. And in a similar way, all of us want to succeed at this game of career, money, savings, retirement, but the only knowledge that's been imparted on us is the first half. And even that has some flaws. So let's go back to our mountain example. Is it reasonable to think that you might bring a couple of tools up the mountain that are specifically designed to get you down the mountain safely? Now, I'm no mountain climber, but that seems reasonable to me. And even if it isn't a tool per se, I think everyone would agree that the techniques used to get down the mountain might be a little bit different than getting up the mountain. Now, the problem that we have today is that we have millions of people that are actually pretty decent mountain climbers. And by mountain climbers, I mean money savers. We put money in our IRAs and 401ks, brokerage accounts, and we do okay at savings. And at worst, at least we know that we should. But what good is savings, especially for retirement, if there's no technique for turning those savings into income? In other words, what good is accumulation if there's no plan for decumulation? And I want to applaud those of you who put money in those traditional retirement accounts, but I need to acknowledge the elephant in the room though. Those retirement accounts are invested in the market and you're not touching them, which means the fluctuation of the market has no direct effect on your day-to-day life, meaning you're not directly affected, but it will have an effect on you if that's your only source of income in retirement. So let me show you some hypothetical numbers of your first 10 years of retirement. Now, in both scenarios, you'll see $100,000 of income, and to account for inflation, you'll see an increase of about 3% a year. In scenario number one, you're only using the stock market as your source of income, which is the plan that most people institute today. Now, let's say on day one of retirement, the balance of all your savings is $2 million. You actually just keep your money invested the way it's always been because, it's never done you wrong.
But Demetrius, people are gonna take less risk in retirement.
I know. You'd be surprised how many people don't know that. And money in the market is money in the market. It's still gonna go up and down. Anyways, by the end of their 10th year of retirement, they're now down to $752,000. Now, scenario number two is a little bit different. We have stock market and we have cash value life insurance. So we have a risky asset and a safe asset class as well. And we still have a total of $2 million, except it's split 50-50 down the middle between both asset classes. Now, when the market is up, you'll draw income from the stock market. You'll account for taxes and things like that. And when the market is down, you'll draw income from your life insurance policy's cash value. And by the end of the 10th year of retirement, the total value of both assets is over $1.35 million. Now that's a difference of over $550,000, friends. All because life insurance allowed your market-based assets to recover from those down years. So why wouldn't more people do this? Why is it not common knowledge in financial teaching? Why don't we talk about how to turn your nest egg into income? And I think there's a myriad of reasons, but I'm going to talk about just three of them. Reason number one may have to do with the way that life insurance is sold. Because in the life insurance community, there's a subset or a sub-community of people who work in the industry just like I do, who have kind of overhyped the infinite banking concept, or just IBC for short. And there's a number of cases that show that IBC actually does work, can work, but it seems like it's been overhyped so much to the point where it seems like it's a prescription for everyone. And I think sometimes if the sales pitch is rooted in attacking the other side, a lot of people tend to be skeptical of the person. Reason number 2 probably has to do with loud, passionate, influential talking heads who have a predisposition for hating life insurance. So much so to where their mind literally can't fathom how it can be useful. And reason number 3 is the shiny object syndrome. Life insurance is not sexy. It's not manufactured to produce 25 and 30% rates of return. And because of that, I think it lacks quite a bit of appeal to the masses. Like, we've been kind of conditioned to mindlessly put money in the market, and people more often than not would rather risk all their savings to get a greater rate of return as opposed to just risking some of their savings. Most people, to no fault of their own, haven't done the math to see how something as boring as life insurance can actually enhance something more appealing like the stock market, especially when it comes to retirement income. Now, if you think it'd be helpful to see how this strategy would pan out in a real case study of one of my clients, click this video here.